Morning and welcome, Patriot Radio News Hour on this Wednesday, the day before Turkey Day. Happy Thanksgiving to everybody. Joe and Jason, our final show this week, so we're going to be off the rest of the week after the show. If you need to do some business with us, our toll-free number 800-951-0592. We'll be open for another 3 hours or so, and then we're going to send the staff home to get ready for Thanksgiving. Want to wish everybody out there a happy Thanksgiving. Be safe in your travels. I know that, I think it's snowing up there in Colorado. The weather's beautiful here in Arizona, but hopefully you get to your destinations. Be safe out there. Remember, we are going to be running Black Friday specials all weekend long at the shopping cart page at allamericangold.com. We're going to start it off today with silver, U.S. Silver Eagles, all the way down to $725 a roll. If you buy a case, save another $5. $18,000 for a case. I went out and checked all the big online guys. We're way cheaper than all of those guys. And keep checking. We'll be running, like I said, Black Friday type specials all weekend long there at allamericangold.com. And Jason, today we got a ton of economic data. We got stuff that we normally would get over the course of 3 days. They packed it all in to today. We had jobless claims right about where it's always, 215,000, not really moving. Apparently, all the store closures don't really add up to a whole lot. Continuing claims continued to rise up above 1.9 million, but nothing. Until we get close to 2 million, nothing that I would say super alarmed about. Doesn't scream rate cuts. We also had the second reading of third quarter GDP, the exact same as the first reading, 2.8. So there wasn't a pickup in GDP. Remember, second quarter was 3%, this quarter 2.8. Those are the two big quarters, and then the first and fourth quarters we always have lower. But we're going to end up with GDP, somewhere. It's going to be above 2. Going to be, I don't venture to say probably close to 2.5, something like that. Again, doesn't necessarily scream rate cuts, but we're getting them. And I think we'll get more of them. We got the Fed minutes out yesterday, and kind of the same thing, which is, hey, we're still going to cut rates, but maybe we're going to slow it down. Now, what does that mean? Because they've cut 50 basis points, then 25 basis points. We got the next meeting here in a couple of weeks, so we'll have one more meeting this year. Right now, I still would say we'll probably see another rate cut, and then maybe we'll see the Fed wait and see how things shake out. But definitely the message from the minutes, more rate cuts, but probably at a slower pace. So in other words, you're not going to see a rate cut every single meeting. We'll see how long that lasts. We also got durable goods. Durable goods significantly less than expected, up only 0.2%. The stagflation, right, kind of showing its head in the durable goods number, which is, okay, things are slowing, but prices continue to rise. When you strip out defense and aircraft, durable goods actually fell. 0.2%. And then last but not least, there's a lot of data out. Existing home sales. Now remember, new home sales was a disaster. Existing home sales a little better. Up a little bit, so that was good. Unfortunately, same thing. Prices still way too high. A lot more inventory appearing in the markets. And then last but not least, I know if that wasn't enough, the Fed's favorite inflation gauge. Why is it their favorite? I don't know, because they say it is. Jumped to a 6-month high. So instead of going down, inflation was up. Core PCE up significantly, hit 2.8%, the highest since April of this year. So almost 50% higher than what they say they want it to be. Headline PCE also up 0.2. It went from 2.1 last month to 2.3 this month, at a jump in services and durable goods, driving costs even higher, and then the so-called super core. How many different things do they have? This is ex-shelter. So this is what I like to always refer to as my inflation gauge for homeless people. So if you didn't have to pay rent or a mortgage, get this. Skyrocketing up to 3.5. Yeah. Interesting, isn't it? Inflation not going away. And, of course, Jason and I have been telling you, hey, get ready. These numbers are going to get worse next year. We'll be back after the break. 800-951-0592. Patriot Radio News Hour. Joe and Jason wrapping up the week on a Wednesday. Happy Thanksgiving to everybody. Hope you guys have a great rest of your week. Remember, we will be closed here around noonish today at the main office. Jason's got some stuff, and then he'll be heading out up there in Fort Lupton. We won't be back till Monday. Head out to the website, allamericangold.com. We'll be having specials all weekend long. Right now, it's all about silver. Silver Eagle, $725 a roll. If you buy a case, save another $5 at $18,000 for a green monster box. A quick look in at the markets. The Dow is up right now 25 points. The S&P's down 25 points. The Nasdaq's down 200 points. The bond market sitting at 426. I'm not buying. I don't know if this is going to be one of those where, hey, we're going to let the shorts get out here because the inflation numbers that came out today. We'll see. But right now, about matching the low of the week here at 426. Crude oil is up a little bit, depending on where you look. TV gold, now they're showing the February contract up 20 at 26.67. Spot gold right now is up $7 at 26.41. Spot silver down about 25 cents, $30.10. But again, what are we talking about? We've got a lot of interesting talk. We're going to have a bunch of changes coming, obviously, with the Trump administration. We're going to have a lot more spending. You know what? And there's also, let's face it, there's at least a lot of talk about cuts. Right? Cuts in government, which is, the government, let's face it. Is there a larger, maybe Walmart, I don't know, is Walmart and the government probably pretty close as to who employs more people? Make sure You are diversified, and I mean more than you've ever been. You have to have more gold and silver put away than you've ever had. You have to have more investment away from the debt market of Wall Street and the bond market, right? The yields, right? We don't know how this plays out, but we do know this. The spreads are rock tight in the treasuries. Of course, junk spreads have blown, they're super spread out, which makes sense, right? Companies that aren't very good probably aren't going to make it. But when that treasury market snaps, when the money runs out, believe me, you'll want to be a lot more diversified than you ever thought you had to be. You're sitting on these big IRAs. Get some of it into gold and silver. Take another chunk of it. Check out our friends over at YRefi. You got to have $50,000 or more. But think about this. Up to 10.25% fixed rate of return? Really? For no risk? Well, I shouldn't say no risk. There's always a little risk. But really, not dependent on Wall Street, doesn't care about the Fed, can give two craps about the super core PCE, homeless person inflation. It doesn't care. You can compound it. You can use it as interest. You can change your mind. You can start by compounding, and a couple of years down the road, use it as income. You can do whatever you want. They don't charge fees. There's never an attack on your principal. Yeah, those are all great things. Check them out. InvestYRefi.com. That's the word invest, the letter Y, REFY.com. Or just call them 888-YRefi24, 888-973-3924. And Jason, we're seeing again, we had a big sell-off in gold on Monday. Slowly but surely, right, here it comes, right? Up yesterday, up again today. The Fed now saying that, hey, we're getting ready to slow the pace of rate cuts, so don't expect rate cuts every single meeting. I think that's a good way of saying, we may need to buy a little time because the inflation, have we hit the bottom? I don't know. I think maybe we have. Remember, their favorite gauge headline last time got to 2.1. Right, so let's call it, okay, you want 2%, they say 2.1. Now, granted, it doesn't actually track inflation, but that's always one of those things. Just because they say it doesn't make it true. If you repeat a lie over and over and enough times, does that make the lie true? No, it's still a lie. But they get everybody to repeat it. But it went from 2.1 to 2.3. The core went all the way to 2.8, and the super core went to 3.5. So, Jason, it doesn't take a rocket scientist to figure out, okay, we're going to have to slow down the pace of these rate cuts.
Yeah, well, if inflation does start getting worse and worse, it doesn't make sense, does it, Joe? But we do have real rates for real loans going up at the same time as their prime going down, which I had mentioned before, Joe. It seems like they want the government to borrow at bottom rates, and everybody else has to pay the highest rates. And that is one way to keep inflation under control, because really the government borrowing is all printing out of nothing. So it just depends on how they spend it, right, Joe? They might spend it as fast as the rates go up for us, keeping inflation slightly under control. How about that, Joe? We get 3, 4, 5% regular by how they calculate inflation numbers, but the government's borrowing near zero, and we have 10% mortgage rates. How does that sound?
Yeah, and it's going to be really, really interesting as we continue to watch on debt issuance. We're going to have to see. Remember yesterday, Judy Shelton, she was out talking about the need. The government's going to have a need now to create another debt auction. In other words, we can't just sit here every 6 months and say, okay, we're going to add another $3 billion to this auction, another $3 billion to that one, another $2 billion to that one, right? And these auctions, the bigger they get, the harder it is to sell. But that makes sense, right? Everyone can understand. Hey, if I was, 10 years ago, we were selling 10-year notes and we only had to sell 20 billion of them. Now all of a sudden, now we got to sell 50 billion of them. Well, yeah, it's going to be a lot harder, right? It's going to be a lot harder to sell that much. So we would need to create a new auction. We did that not that long ago, right? We added the 20-year auction. There's now talk that the new Treasury Secretary, Scott Bessent, is going to be the guy that is going to be forced to add a new auction as the debt levels continue to pile up. It's been floated about a potential 50-year auction. Now, you got to remember, why will these auctions be long dated? Because you said, well, wait a minute, Joe. Why did we create a 20-year auction? Why didn't we just create another, who knows, like a 6-year or a 4-year, an 8-year? Why are we doing these long dated stuff? It's a great question. The answer is pretty simple. Because of the amount of debt that we have to roll over every month. The only way to get some relief from that is to sell very long-dated Treasury. So whatever debt we sell, let's just say it's a 50-year. Let's just say that's what they decide. That debt doesn't have to roll over for 50 years. Right? Even if they said, we're going to do, $20 billion of 50-year notes. Well, that's $20 billion that won't roll over for 50 years. This is why it's always going to be longer dated. Now, one of the horrible things Janet Yellen has done as Treasury Secretary is she has loaded up on these short-dated auctions. So much more debt keeps coming due every month. The interesting part is there's talk that they potentially could back that particular new auction with gold. I know one of the things that when we talk about the new Treasury Secretary, he is very in tune globally. He's been on record as saying there's a shift in the global markets, and a nod to BRICS. And we know that BRICS, one of the requirements, all the BRICS countries, they're all buying gold. And I know that he has said, Jason, he wants to be the leader. He wants, whatever the new thing's going to be, we've got to be first. And I think this makes a lot of sense that potentially backing this one particular new auction, which we know will be long dated, maybe you back that one with gold so you don't have to back all of it, right? Hey, we're not going to back the 2-year notes, right? The 3-year notes, right? We're just going to back these really long ones with gold. It's an interesting thing, just the fact that they're talking about it says a lot about where we're at. I mean, that's really the thing, because that's how it starts. First, you got to have people start talking about it. This is how they move, right? You get people warmed up to the idea right before you actually do it.
Right. Well, and we talked about we've talked about the Fed's best play to try to normalize the economy is to inflate their way out. If they were to reset the gold price in any manner up, and then do something like what you're saying, back up, whether you say 50-year bonds or whatever they're going to do, that'll be very inflated. That actually would be a part of the plan of inflating their way out of it. So you reset the price of gold, you can blame BRICS. Oh, BRICS going to set it at this price. Now we have to reset it. It's all their fault, but we're going to do it. And then, because that's one thing, that's the tough thing about gold being backing up a currency, is that if you reset the price, you inflate the currency very quickly. It's good if you own gold and things that go up in price, but not good for the guy who's just trying to buy groceries and pay the rent. So these are dangerous things that are being talked about when it comes to the household economy, Joe.
Yeah, and I want to remember, Jay Powell's term is up in 2026. Probably be Kevin Warsh. That's what I'm thinking now, because we thought Warsh may be the Treasury Secretary and then move to the Fed, which I didn't think made a lot of sense. We also are supposed to get the Doge guys, right? What did they say? Hey, by summer of 2026. Now we're talking about, we need new issuance. Why do I think 2026 is going to be an important year? 800-951-0592, Patriot Radio News Hour. Wrapping up the week on this Wednesday, U.S. Silver Eagles on super sale today, $725 for a roll of U.S. Silver Eagles. If you buy a case, the Green Monster box, save another $5 a roll, bringing the cost all the way down to $18,000 at 800. 951-0592, and Wall Street's going negative here. I'm not surprised with the inflation data, the durable goods data that's come out today, but something, we're talking about this bond market, the need for issuance. Something else people need to know, that since March of 2000, you know that the Federal Reserve has set the deposit for the depository institutions, the big banks. They have to set aside no money, none, for your deposits. Normally, right? They're saying, hey, you got to save 4 or 5%. Excuse me, I had a sneeze. It's at zero. Why? Well, the answer is simple. They know that these banks, especially the big banks, because let's face it, that's where all the money is, right? Let's not kid ourselves. You take the 10 largest banks in the United States, and that's 90% of all the deposits, okay? And by the way, these are the guys that buy all the debt. They need it to be zero right now, because these banks have to buy so much of this debt. Not maybe, have to. And if they don't, boy, rates are going to go so much higher. But what does that mean for us? That means the banks are really undercapitalized, a lot more than what they promised. See, remember Dodd-Frank? They put these rules in place. They did. Now, of course, most of the rules were actually rules against the depositor. Like they didn't already have enough. Right? When the bank rips you off, they can rip off all of their clients, and somehow you can't file a class action lawsuit against the bank. All you can do is go to arbitration, and then if you want to fight the bank in court by yourself, good luck, right? Yeah. The fact that when you put the money in the bank, it's no longer yours legally. It's the bank's. Right? It's really, when you think about it, you're like, oh, that's dumb. But that's how it's been. That's how it works. But then they did put in, it wasn't all bad for us. They put in some stuff like, okay, reserve requirements was one of the things. Hey, you've got to keep X amount back. Just in case you got these bad loans, you need to have capital. And by the way, we don't want your capital to be just debt, because when you have bad loans, that means the debts are bad, right? So we want you to have something where you don't have to sell all this debt that we know is bad. And they came up with this reserve capital requirement number. They raised it and said, we're putting our foot down. Well, as soon as it got bad again, guess what they did? Never mind. And, of course, what was going on in 2020? Oh, yeah, that was COVID. Of course, the taper tantrum started at the end of 2019. Let's not forget that. And they've never changed it back. So what's the problem? Well, the problem's pretty simple. Now all of these banks have is these debts. They'll have to sell them if there's any sort of a run. Not to mention the illusion that they have when it comes to the security of your bank accounts. Right now they insure up to $250,000. As of the end of the second quarter, you know how much the FDIC had? $129 billion. That's it. That's all they have. Total deposits in U.S. banks is over $17 trillion. Let's see, 129 billion to insure 17 trillion. That's about 7 cents for every $1,000 deposited. So let's look at it in this way. Let's say you had $100,000 in the bank. Okay, which is, hey, I'm under the limit. It's all going to be insured. And they've got 7 cents for every $1,000. I mean, right? I mean, let's see, what would that be? 100? That'd be about $7, if my math is right. That's about how much they actually have. That dog doesn't hunt very well, but they want you to act like it does. So when we're sitting here talking about being diversified, yes, I'm worried about the debt market. Yes, I'm worried about the asset bubble on Wall Street. Because this is the cycle, right? The boom and bust cycle. But this illusion that your money is safe, remember the bad side of the rules, which is, oh, by the way, it's going to be a bail-in. The depositors are going to have to bail these banks out. And I know that we promised that we were going to protect you guys. And instead, what did they do? Well, they don't have to hold any reserve on your deposits. On top of that, they now allow these guys to just pretend that they don't have all these losses. Why haven't more banks failed? Because they get to pretend that they don't have these losses because they're saying, oh, well, we're going to hold it to maturity. If the market crashes, they won't be able to hold these things to maturity. That's the big problem. Patriot Radio News Hour. Maybe you want to take advantage of the silver super sale. We'll be right back. 800-951-0592. Patriot Radio News Hour here on this Wednesday. The start of our Black Friday special started today. U.S. Silver Eagles. You're going to be able to save a ton of money. $20 off a roll of Silver Eagles. That's $1 an ounce off the price. We're the cheapest around, $725. But wait, if you want to buy 25 rolls or more, a Green Monster box, save another $5. Green Monster box right now at $18,000 at 800-951-0592. And Jason, we're just kind of laying out. This is the reality. The reality is the Federal Reserve and the federal government came up with these Dodd-Frank rules that were supposed to make these banks safer. And essentially, all this they've done is taken all the restrictions on the banks and pretty much got to just said, never mind. But we're going to leave all the horrible stuff for the depositors. That stays. And it's very, it's upsetting because we know, and I'm going to throw 2026 out there because that just seems like a natural way here. With Jay Powell's term being up, we're going to have to appoint someone else to run the Fed. We have the Doge guys. Hey, we're going to wrap up our suggestions by the summer of 2026. And now the fact that we're hearing now, and we knew it was coming. Hey, we're going to have to create another auction. We can't just keep increasing these auctions. And we got another increase in the auctions coming in February. Right, they're going to have to increase the size of these auctions, which is going to be what? Dropping those bid to covers, right? We're going to have bigger tails, which is never good. And then talk of maybe we'll only have to back the new issuances with gold to kind of offset what they believe BRICS is going to be doing. But here's the thing. These dealers, and here's what we know. The longer the term, the more the dealers get stuck with. That's kind of simple math. Okay? The longer the term, the less like Warren Buffett with Berkshire Hathaway, he's got hundreds of billions of dollars. He's buying 3-month, 6-month, one, right? He'll buy all the short stuff. Apple and all them. That's what they buy. The long-dated stuff will end up, a lot of it, on these banks' balance sheets. But we know, and we've told you guys, they're out of money. The reverse repo is all but empty. For the last 4 years, the Fed has said, hey, you don't have to hold any reserves. None. Imagine what would have happened. The reverse repo would have ran out of money a year and a half ago, probably, Jason, if they would have left the rules in place that were supposed to protect us. But, hey, rules only matter when it comes to enforcing them on the public. They don't matter when it comes to enforcing them on their system.
Yeah, the rules are only there to keep control over the undesirables, right? The rules are there for you, not for us.
Yes.
The undesirable, you just go run in your rat cage, run in the wheel, and do your day after day grind. And these rules are to keep you from getting out of the wheel. And maybe becoming one with us, right? They don't want competition. What was it Rockefeller he used to say? John D. Rockefeller, competition is a sin, right? They don't want any competition. Gold was money. Gold was competition money to their new central bank, the Federal Reserve, in 1913. And by 1933, they were able to eliminate that competition through just what Joe said, rule changes, right, Joe?
Yeah, and again, it's something where they do this. They don't make a big deal. You don't hear about it. It's not like, they talk about it on TV. Well, they'll tell you on the TV, oh, thank God they did it. Right? Oh, yes. They really need to take it easy on these banks. Right? Otherwise, gosh, the system's just not going to function right. And this is the problem. Because what the system is trying to say is, hey, guys, you got way too much of this, and it's going to be bad. And instead, all you do is change the rules so you can keep the system going a little bit longer. But now, listen, you're all seeing it. Does anybody honestly think Thanksgiving costs less? Nope. Why does everybody sit there and say, well, gosh, my life was better 4 years ago. My life was better 8 years ago. My life was better 12 years ago. It was better. But now it's almost impossible for it to stay better. Because until we stop issuing all of this debt, Jason, it's just not going to work. And I hope people understand they're all tied together. The banks, the Treasury market, the Fed, right? They're all tied together. And you need to be diversified away from them. 800-951-0592. Final segment of the Patriot Radio News Hour for the week. We'll be right back. 800-951-0592. Final segment here on Wednesday. As you guys know, we will be closed starting this afternoon. We'll be back again on Monday. Head out to the website. We'll be running great specials all weekend long. Today we're starting out with the Silver Eagle special. Silver Eagles rolls of 20. So each roll you get 20 ounces of silver minted by the U.S. Mint in their mint rolls. They're $725. If you buy a monster box, that's how the Mint ships them. So the Mint ships to us in 500-ounce increments, right? So they have these green boxes. There's 25 rolls of 20, 500 ounces of silver. The box, it's like a shoe box. It's probably the closest comparison. And it weighs about 42 pounds, so it's not light. But if you order by the case, you save another $5 a roll. And it'll be $18,000 for the case. You can call and order it right now at 800-951-0592 or go out to the website at allamericangold.com. But Jason, and you can order there, right? You can order there. Remember, if you're going to pay with credit card, we charge 2%. Cash, bank wire, check. You don't. If we ship it to you, it's a flat $35, and we ship it FedEx. But Jason, kind of interesting. It's a good reminder today to talk about all the things that the Fed has let slide on Dodd-Frank that would make if we have. And I shouldn't even say if. When we have this next issue, right, the banks are even going to be less prepared because without any reserves, the only thing that they can do is go to start selling that debt. And once that happens, right, it's kind of like a cascading avalanche. And, of course, the Fed said, hey, you don't have to have reserves. And, oh, by the way, on top of that, you guys need to be buying up all of this debt because the issuances just keep getting bigger and bigger and bigger. It's kind of the why don't you have to have anything set aside? Probably because, Jason, we need every dollar we can get to buy the debt markets.
And so it goes, right? It's going to get worse and worse. And let's just see what kind of spending is coming here in the next few months and how severe that's going to get, Joe. The budget's going to be, I think, explosively out of control this next time around. You know, remember the whole rule they put – you talk about rules, right? The little rule they put into place, if they can't figure it out, they'll just cut 1% off everything. And they can't even do that. They broke it into 6-month spending bills. They're going to revisit in March. And you're only going to have the whole government shut down and that whole deal. And I think the cure for them will be, well, we'll just spend more, spend it on the social programs, spend it on the military, and increase those budgets. Keep on spending, fund all that creepy stuff that we always talk about on the air that we don't want, Joe. They'll just keep funding it.
800-951-0592. Joe and Jason, God bless everybody. We'll be back next week. We got the half-empty cup. We're going to finish up with that, and then we'll be back next week. Happy Thanksgiving to everybody out there. We'll be right back.